Good morning, ladies and gentlemen, and very welcome to Hotel Africana. You're being hosted by the Deposit Protection Fund of Uganda. And before I take you through the brief program for today, I think it is only in order that an occasion of this nature that has national importance gives us an opportunity to remind ourselves of our citizenry and our commitment to this country. And I'd like to request that we do that by honoring our anthems. So if you may please be upstanding for the national anthem and the East African Community Anthem. We will follow that with a short word of prayer. Mariam, wherever you are, we would like to recognize the very first person who entered in the room this morning and request that you say for us a short prayer to start off our day.
Oh Lord, we thank you for this day. We thank you for bringing us here together at this opportune moment. We pray that, Lord, fill this day with joy and make it come with opportunities. Lord, we pray that as we are going to be here in this training, the facilitators, give them wisdom, guide them, O Lord, and bless those who have brought us here, the organizers. Lord, you know everything that will happen here, and we pray that let whatever happen for the good. All that I pray in the name of the Father, the Son, and the Holy Spirit. Amen.
Amen. Thank you very much. Please be seated. My name is Patrick Ezaga. I head the communications department at the Deposit Protection Fund, and I'll be your moderator for today. We are here for a half day, which we hope will be quite impactful and purposeful at the same time. And just to set the tone for the day, I'd like to quickly run you through what our program for the day will look like. The screen is a bit faint, but if you have the eyes, you can see. I think the first two aspects have been taken care of by way of registration and arrival. We've done with the anthems and the prayers. We are now at the third stage where the moderator officially welcomes you, and we will soon have an expectation session. Our day will be kicked off with a keynote address by the Chief Executive Officer of the Deposit Protection Fund of Uganda, and she will then officially open this engagement with the media fraternity in this country. Soon after the keynote address, we shall then dive into the gists of the purpose of today, which will be a presentation about deposit insurance systems in this country. And that will be presented by members of the executive who are on the high table here, specifically Alan and Angela. At the right moment, we will introduce them to you. Soon after that presentation, it only makes sense that once you receive information, you need to be given an opportunity to also seek further indulgence by way of questions, comments, and answers, which will be provided. So we'll then have a Q&A session, which should lead us into our tea break. We'll have a health break at about 10 or thereabouts, just to freshen up and stretch ourselves. Then we'll come back to another session of what I think is also a very important aspect of today's engagement, which is a discussion on your role as media people. We need to put our minds into having a discourse on why is it that the DPF has identified this team of people, and what do we expect out of it. That should lead us into some general discussions by way of a plenary, and once we're done with our discussions at the plenary session, we'll then move towards wrapping up the day. And we do hope that anywhere about midday 30, would have actually come to a close of today. I think I'd like to start off by first setting the tone for the day. And let me start off with a very simple sample survey. First, that you, the members of the media fraternity, are drawn from across the country. Normally, when the media is invited for engagements, there is a tendency to focus on the central part of this country. But we at DPF think differently. We think that those of you who are even based up country are doing a good service to this nation, and you must therefore deliberately be involved in some of these interactions that take place. That explains why we invited the bureau chiefs who are based outside the greater central region, because we think that, as I mentioned, you may be outposts, but you also have a very important target audience that we are dealing with. So from the outset, and for our purposes as DPF, I'd just like to get a rough feel in the room. My team with the mics, you may hold it up. Let me first ask, how many of you in this room had heard about DPF before today, or before the invitation came? By show of hands. Let's start with a show of hands. How many are aware about DPF? Okay, this is about half. How many of you appreciate what DPF is all about? There's being aware, and there is appreciating what DPF is all about. If your cousin asked you, what is DPF, what do they do? Would you confidently give them a 5 minutes explanation? How many have that confidence? By show of hands, again, numbers are dropping, yes. Which is okay. That's actually precisely why we are gathered here today. I mean, you can already see that the people assembled in this room are the cream de la cream. The media, in any setting, you are a very powerful lot of people. But if by random sampling, out of about 60 or 70 people here, about half are aware. They have heard about DPF. But a very dismal percentage is actually informed about what DPF does. Now you can see why we felt that it was important for us to have this interaction with you, because as you will see a little later in our presentations, deposit protection is a concept that is still getting its foothold in this country, and yet it is one thing that is in very many ways very critical for the economy as a whole. The third question I'd like to ask, how many of you have bank accounts or you deposit money somewhere? By show of hands. If you have a bank account, practically everybody, probably your salary is paid through the account, isn't it? How many of you know what would happen to that money of yours in the unfortunate event that your bank closes? Do you know what would happen to your money? How many know what would happen? Let's go on with our survey. Show of hands. The rest of you will leave it in the hands of God, isn't it? But please underscore one very important fact. You are the informed people in society. If up to today you are an account holder and you practically have no clue what would happen to your deposits should anything happen. How about my cousin deep in Terego? How about the other people who don't have the skill and the power that you hold? So if we had not appreciated the purpose of this interaction, this simple survey I've done, ladies and gentlemen, should in itself really explain why it has been very, very necessary that the Deposit Protection Fund of Uganda deliberately engages with you, the members of the media, because it is common knowledge you are supposed to be the eyes and the ears of the public. And that means it is very important that you are well informed about what we do as the DPF. So on that note, therefore, I am very happy that my colleagues in the executive CEO and team, you can now see that I think this was a very good call. The decision that we must have a deliberate interaction with the members of the media was a very, very strategically good call, because we can then tell from this audience that we still have work to do with regard to awareness. I would therefore like to wrap up my initial welcome remarks to the team, and we move to our next item on the agenda, which is supposed to be a keynote address about our gathering today. And the keynote address, ladies and gentlemen, is going to be delivered by Mrs. Julia Oyet. She's the Chief Executive Officer of the Deposit Protection Fund of Uganda. Let me add the pioneer CEO, who in many ways has been at the forefront of establishing this institution. It's still a young institution from about 2016, 2017. That's when actually DPF set on the path of growth. And from the onset, Mrs. Oyet has been at the helm, providing stewardship and leadership to the management team and the rest of the staff that are here. So, ladies and gentlemen, may I request that you join me in welcoming our CEO to make her keynote address. Madam, you're welcome.
Thank you very much, Patrick. Patrick, when we were organizing for this event, you didn't alert me that it's not easy standing before the media, because even before I start speaking, the stories are being written, but here I am, and I will deliver to the best of my ability. Editors and members of the media fraternity, staff of the Deposit Protection Fund, distinguished ladies and gentlemen, good morning, and welcome to this maiden event at which the DPF gets to interact with you more deeply. As Patrick has noted, a number of you know about the DPF, but probably fewer know about the role of the DPF, and so we're very excited to receive you this morning. We are also happy that the attendance is good, and we thank you for this. Ladies and gentlemen, the theme, deposit insurance and the media, what is my role, was deliberately selected because we would like you to take center stage in the deliberations that will take place today. Beyond sharing information about the Deposit Protection Fund, we shall pay keen attention to the perspectives that you as the media have that are intended to improve on the way we conduct deposit insurance in Uganda and help us promote the deposit protection agenda across the entire country. It is prudent, therefore, for me to commence my remarks by sharing a brief background about the Deposit Protection Fund of Uganda. I will explain who we are and what our mandate is. So the Deposit Protection Fund is a legal entity that was established by the government of Uganda in 2016 when the Financial Institutions Act of 2014 was amended. In 2017, the operationalization process began, and the Minister of Finance appointed a board of directors to take charge of the fund. The fund was initially sitting within the Bank of Uganda. Our offices were housed. We had one office that we all sat in, and the Bank of Uganda provided a lot of support, including seconding a team of 11 staff that started the operationalization process in 2017. Ladies and gentlemen, I'm glad to state that we have proceeded with the operationalization, and now we have recruited 34 new staff, and a lot of them are with us here. And we can now say that the fund is fully operational with the addition of the new staff. And allow me at this juncture to introduce to you our senior management team. Sitting at the extreme end is Mr. Appel. He's our head human resources and administration. Next to him is Dr. Michael Lugemwa. Doctor heads our finance team and operations team as well. We have Mr. Balam Sempala. We also call him Pastor because outside the DPF, he does a lot of pastoral work. Balam, thank you. And then we have Alan Lwetabe. Alan Lwetabe is a CFA, for those who understand investment language. He's the youngest member to have joined us. He joined us more recently. Alan, thank you. We have Mrs. Angela. She's our legal counsel and board secretary. And finally, we have Patrick Izaga, who I'm sure you're going to keep interacting with on a day-to-day basis. Thank you, Patrick. Ladies and gentlemen, currently the contributing institutions stand at 34. We have 26 commercial banks, 4 credit institutions, and 4 microfinance deposit-taking institutions. It is imperative to underscore at this point, therefore, that as depositors, if you want to benefit from the protection that is given by the Deposit Protection Fund, you have to maintain a lot of interest and ensure that your financial institutions are actually regulated and licensed by the Bank of Uganda. The cardinal mandate of the DPF is to ensure that depositors are paid their protected deposit up to 10 million shillings in that unlikely event that the financial institution in which they place their money is closed for outright liquidation. And in this, here I need to explain that where the closure of the bank results into a transfer of deposits into another financial institution, the DPF doesn't come in. The DPF comes in if it's closed and the assets are to be liquidated to be able to pay depositors. Some of you who have been here as long as myself might remember Greenland Bank, Cooperative Bank, and ICB. Those were outright closures, and they were paid by Bank of Uganda at that time. When we look at banks like Crane Bank, that was not a liquidated institution. It was a transfer or a purchase and transfer assumption arrangement. And so the depositors just went to DFCU and still got all their money. So there are many tools at the disposal of the central bank when trying to exit institutions that are facing financial challenges. Indeed, my team is going to make a presentation to you today, and they will also explain to you about how we increase the deposit insurance limit from what used to be 3 million to the now 10 million. It was accompanied by lots of detailed studies, and that is what we zeroed in as a country to be the most effective coverage limit for the sector. And I know that many of you say 10 million shillings is little, but at 10 million shillings, ladies and gentlemen, we are covering 98% of the total deposit accounts in the sector. So that for the deposit insurer is quite sufficient. Ladies and gentlemen, one of the major public policy objectives of the fund is to contribute to building public confidence in the financial system. As an enlightened group of people, it is our considered view that you are better placed to appreciate the importance of an impact of public confidence on the strength of a financial system within an economy. Therefore, the fund exists to give assurance to the public that they can confidently deposit their money in institutions regulated by the Bank of Uganda. To achieve this objective of enhancing public confidence, the fund is mandated to create public awareness, keep the public well informed of its purposes, and ensure that customer deposits are protected. We cannot therefore meaningfully talk about public awareness without referring to the media. The two are inseparable, just like twins that are joined at the hip. As such, your role as media practitioners is creating public awareness is extremely critical in contributing to financial sector stability. Put differently, the media contributes to the strength of a financial system, and therefore you're a very key player in contributing to the financial sector stability that we have enjoyed over a long period of time. Ladies and gentlemen, public awareness derives its relevance to deposit protection from two major areas. One is the Financial Institutions Act, which is a legal document, and the other is from the core principles that are issued by the International Association of Deposit Insurers, specifically IADI Core Principle 10. Therefore, the importance of public awareness, and by extension, the media, as a vehicle for its attainment, is firmly rooted at both national and international levels. What remains now is for us to work together towards establishing the required synergies and collaborations in order to achieve the desired goal of a highly informed public. Ladies and gentlemen, the DPF is responsible for conducting countrywide stakeholder engagements, increasing public awareness, and as media practitioners, your role cannot be overemphasized. Thomas Hunt, an American theorist, remarked as follows: "The media has enormous power. The media is undergoing huge change now. It seems like it is time to step back and look at how the media shapes our lives and our perspectives of reality." Permit me, ladies and gentlemen, to share with you an African proverb. You know, we're all Africans, so it's good to always go back to how did the ancestors perceive it. So the ancestors said, knowledge is like a garden. If it is not cultivated, it cannot be harvested. And so therefore, if we take knowledge to mean the same as awareness in our context, we can conclude that today's engagement is cultivating, or we are cultivating in the garden. From this cultivation exercise, we must harvest, and the harvest must be a well-informed public. Whereas DPF has embarked on increasing public awareness and mass sensitization of different stakeholders, we have found it extremely important to have deliberate engagements to share all relevant information with you, the media, who are the eyes and the ears of the public. The media wields enormous power. The media can make or break. It influences public perception. Today's interaction emanates from our firm realization of this fact. As professionals, I'm sure you've come across the adage that one falsehood spoils 1,000 truths. On our part, we commit to ensuring that we avail you with relevant information on a continuous basis to enable you report factually. It is our hope and expectation that you will rise up to the challenge and disseminate correct information about the DPF across the nation. Ladies and gentlemen, on behalf of the board, management, and staff of the DPF, I thank you very much for honoring our invitation and sparing your precious time amidst your demanding schedules to participate in this engagement. At DPF, we commit to continue working together and striving to build public confidence in the financial sector. I therefore take the singular honor to declare this event officially opened and wish you all fruitful deliberations. Thank you for listening to me.
Thank you very much, CEO, for the keynote address. CEO mentioned the fact that public awareness is a mandate enshrined in the law. The Deposit Protection Fund of Uganda is enjoined by law to ensure that every citizen in this country is informed about what deposit protection is in this country. You saw in our earlier survey that we still have a lot of work to do. If just about 5 or 10% of the scribes, the people with the most powerful weapon, the pen, just about 10% of you can confidently talk about DPF, that just tells you how much work we still have to do. And what the CEO was mentioning is that we can't go it alone as DPF. We are not scribes. We are not journalists ourselves. We have the information, but we rely on your platform. We rely on your skills. And for those who are business-minded, believe you me, this engagement is mutually beneficial to both DPF and for those of you from the media houses. We have a very elaborate public awareness program, which we are going to roll out, and I'm very sure that we'll be coming to your doorsteps, knocking and requesting for your hand, and we walk this journey together. So once again, I appreciate our CEO for setting that tone. And I would now like to request that we focus our minds on what could probably be the critical component of our discussion today. Up to this point, we're just throwing little bits of jabs here and there to you about what deposit protection is. And as per our program, we would now like to go to the presentation, which we are prepared to share with you. This is the knowledge sharing session. And this presentation, as I mentioned, is going to be handled by two people. First and foremost, Alan, who heads our investments department, and he'll be doing that together with Angela, the board secretary and head of our legal department. So, ladies and gentlemen, at this point, we go into the presentation. I know a number of issues may be coming up within you from the remarks we were making, but please just take note of them. We're going to have an opportunity for feedback. For us communicators, we say communication is not effective unless there is feedback. So the time will come when you'll have an opportunity to be responded to. So I would like to now take this moment to invite you, Alan, to please come and set the tone rolling for our colleagues so that you can start to know what deposit for assurance is. He heads our investment departments, and it was deliberate that he starts off the presentations. So, Alan, welcome to make your presentation.
My name's Alan Luetabe. I'm the head of investments at the Deposit Protection Fund. In my evening time, I'm also a teacher. So you forgive me if I take your time explaining some points. I'm a creature of habit. When I start to speak, sometimes I go overboard. We are delighted to have you here to share about deposit protection and how we can leverage your work in the media to share the story, but also to enlighten and enhance financial education for the public. And for today, we are here to speak about a couple of things. Our focus is to provide to you information about deposit insurance as a subject and deposit protection fund as an entity. And we'll go through the genesis, share the vision and mission, and talk about our roles, functions, how we are organized, and some of our achievements, and the things we are looking to do as we become a more important entity within the financial sector and, of course, financial stability realm. So I'll be sharing some of these pieces of information as we go along. And of course, as Patrick has shared, my colleague Angela will be coming through also to give her insights on some of the core areas within her expertise. But to set us off, the subject of deposit insurance. What is that? Deposit insurance was initially developed out of the need to protect the most vulnerable and uninformed savers or depositors. What we recognize is that in many places, there are people who place their money or their trust in financial institutions, but they don't have the ability, the knowledge to understand how a financial institution works. And so if there is a problem, they are heavily impacted. And we saw this in the 90s. At the beginning of the 90s, a bank called DPF Bank was closed. And there were so many people in central Uganda who used to save with that bank. They lost money. Towards the close of the 90s, we had a number of banks that were closed. ICB, Cooperative, we had Greenland Bank. All these were closed, and some people lost their money. And so the key focus has always been, how do we protect the most vulnerable people? Somebody has their life savings within this commercial bank or this financial institution, and what happens if they lose money? It even became more important globally in 2007, 2008, when there was a financial crisis. And we saw this in the developed world as well, where big banks were closed and people sometimes lost money, lost investments, lost their life savings. So deposit insurance globally has become a very important subject, and that countries are encouraged to set up entities that are responsible for protecting the most vulnerable, uninformed savers within any jurisdiction. One of the biggest stories out of the financial crisis was Northern Rock. For Arsenal fans, you know this place. It's called Newcastle. Newcastle is where Northern Rock is based or was based. And in 2007, it was closed, and we saw big lines in the United Kingdom, Northern England. We saw big lines, people lining up to pick their money. And of course, luckily for them, this institution was passed on to the Royal Bank of Scotland. And so they were able to be managed that way. But imagine all these people in a very developed country lining up to get their money. If they hadn't gotten, what would have happened in that country? So the story about bank failures and people queuing up for money is not strange. It's not unique to Uganda. It can happen anywhere, and we should try and strive to avoid it. And so the reason deposit insurance systems are designed is to avoid the picture you see in front of you. We don't want people to wake up in the morning and they are lining up all over Kampala Road at Centenary Bank or any other bank. We don't want that picture. We don't want to see these pictures. And so government has taken an initiative to protect the most vulnerable by creating the Deposit Protection Fund of Uganda. And our purpose, as we will see, is ideally to protect the most vulnerable. But we don't do this in isolation. We are not forging or coming up things out of the yellow. We are working with international-based standards and practices. Our key organization globally is the International Association of Deposit Insurers, IADI, which is based out of Basel, Switzerland. It has over 85 members, 8 associates, and 16 partners. 85 members, that means there are different countries that have set up deposit insurance entities who are members that constitute the International Association of Deposit Insurance. This was established in 2002 and is the body responsible for coming up with standards, best practices, and helping us as we establish our own deposit insurance entities in our countries. They are the ones helping us with putting in place the right processes, structures, and also following best standards. And so one of the key things that IADI has come up with are the core principles of effective deposit insurance systems. How can we do our work better? We strive to do the best, and we like to follow international standards as we do that, such that our work is effective. We want to ensure that no one or few people, especially the vulnerable, don't lose the money in the event of a crisis. And so we follow these principles as we set up our structures. So DPF became a member of IADI in April 2018. Previously, the Central Bank, Bank of Uganda, was the member that was representing Uganda. And in 2018, Deposit Protection Fund became a fully fledged member of IADI. But what does that mean for us? It means we are accountable to a global body in the way we do this business. We like to follow the highest levels of ethics, the highest level of professionalism, such that whatever we do and the way we operate can be measured against an international standard. So what are the proposals? How does deposit insurance work? According to IADI, there are 4 different ways we can organize ourselves in terms of creating a deposit insurance entity. The lowest level, the most basic, is the pay box. Pay box. And as a pay box, a deposit insurance entity would be responsible for payment of protected deposits. It's very similar to what happened in 1999-2000 when there were significant bank closures in Uganda. A lot of the banks that were closed in Uganda at the time, they did not have sufficient funds to pay back to their depositors. And so there was a mechanism government organized where the savers in those banks were paid back. Such a scenario would fit exactly under the pay box. So a pay box is the model where we have also started from as DPF. We've been running, we were organized and created to be able to pay back protected deposits. As the laws have evolved, we have assumed additional responsibilities. And so DPF today, as it looks today, is considered to be a pay box plus. We have additional responsibilities. We can be invited by the central bank in the event of liquidations and to support them in liquidations. And this is the new law that we are working with. So for DPF's purpose, you can think about us as a pay box plus. So we can pay protected deposits up to a certain number, and we can also support in the liquidation process as and when we can be invited. The other activities that IADI recommends or has proposed as possible activities of a deposit insurance entity is to be a loss minimizer. A loss minimizer is the next level after Paybox Plus. And what does a loss minimizer do? A deposit insurer that is designed as a loss minimizer can actively or proactively engage to find the least cost resolution strategy. I'm going to explain a little bit about that. Imagine there is a bank that has a challenge. Perhaps it's a bank that is owned by a family-owned bank. This is still common in some countries. And imagine the family patriarch, who is the chairman of this bank, has a stroke. And so the bank is constrained because there is no clear direction. There is no individual leading. So in a loss minimizer strategy, we should be able to come in and reorganize the management arrangements there and help this institution to survive and thrive. So that may be a least cost strategy that doesn't result into a bank closure because the CEO has a stroke. So in such situation, you need additional tools to be able to come in. Of course, there are other examples. That is really a more basic one. But there are other examples where deposit insurance entities can come in even before and be able to influence how a bank can be resolved to become a much better institution without resorting to bank closures. And so a loss minimizer is able to operate that way. We are not a loss minimizer. We are not able to do that. We need a new mandate, and my colleague Angela will speak to some of these things. We need a new law to be able to do that. For now, DPF is a Paybox Plus. We know some deposit insurance entities actually in Africa as well that do the fourth level, being a risk minimizer. Our sister agency in Nigeria, the Nigerian Deposit Insurance Corporation, has reached the fourth level. They are a risk minimizer where they have the powers. They have the powers to resolve a problem bank. They can also make entry into a bank and try to find out what are these issues that are making this bank appear weak, or which issues might cause the bank to fall into problems, and so they can take some actions. That is what the Nigerian Deposit Insurance Corporation is able to do. But of course, we have to be mindful that in Nigeria, they have been in existence for over 30 years. So they have gradually matured to become a more effective and full deposit insurance entity. So these four areas are really the way we think about what we can do and where we are. There are 4 levels, and we are on level number 2 as a Paybox Plus. But our ambition, our vision is to reach level 3, which is to become a loss minimizer in the coming years. We believe with the loss minimizer strategy, we'll be able to help most of the issues that we see in our market, and we will be more proactive. We should not be waiting for banks to be eliminated from the financial sector. We should be part of the solution in helping them transition into more effective banks for us. Where does DPF come from? It was established around 1994, so slightly after the initial bank closures in 92, 93. It was enacted under the Financial Institution Statute of 1993. It continued working under the supervision of Bank of Uganda as a department within there until about 2016, when a revision of the Financial Institutions Act was made, which led to the creation of a legislation that permitted DPF to become and operate as a separate legal entity. It is different, it's separate, it is independent of the Central Bank of Uganda. Our vision, and I shared this before, is that we seek to be to excel in deposit protection for financial sector stability. Excellence in deposit protection for financial sector stability. That's our vision. Our history as a country, we know we've had challenges with our banks, but there's a lot of work we are doing to ensure stability. And for us, in our small part, we want to excel in what we do, which is the business of deposit protection for financial sector stability. And our mission is to foster public confidence through protection of depositors in institutions regulated by Bank of Uganda. And of course, our values are very key. They are very key in the way we deliver our business, how we create value to you, the public, and our stakeholders, and we follow an acronym called RIGHT: respect, integrity, transparency, and excellence. Those are the key things that whenever you experience the DPF brand, always think right. If it's not right, you should let us know. We will make it right. Our strategic objectives, as highlighted there, we have 7 strategic objectives. Enhance confidence, depositor confidence. This is why we are here. Part of that is building this awareness. Develop and improve a system for payment of insured deposits, increasing public awareness, enhancing the performance, financial performance in particular, improving efficiency of our processes. We are seeking to build strategic partnerships, and of course, improving our own knowledge, our board management, their understanding of this space. So this is the running framework that is going to guide how we evolve at the deposit insurance entity, our vision, our mission, our values, and our objectives. This is really the meat of how DPF is going to operate in the coming years. Our roles and functions as DPF are enshrined in the Financial Institutions Act 2004 as amended, particularly Section 109. The key things are that we must pay depositors or protected deposits in the event of closure of a financial institution. We can act as a receiver or liquidator if appointed by Bank of Uganda, and we may perform any other duty as may be conferred by law. And so we can see that from the first 2 points, those are the key reasons why we believe we are a pay box plus. We are able to pay protected deposits, and we can act as receiver or liquidator if appointed by the central bank. Good. DPF, like I showed in our vision, we are seeking to contribute to financial stability by ensuring that depositors are protected, particularly the most vulnerable and uninformed, savers and depositors in our system. So we are seeking to pay to make sure that in the event that there is a challenge, there is a crisis and we are called upon, we should pay as fast as possible if there is need. One of the worst things that can happen to you is if your bank closed and you have to pay school fees on Monday and you have made a commitment. Imagine the stress you'll have if your salary just went in on Friday. Sunday you get a message that your bank the doors are closed. What will you do on Monday? So one of the reasons one of the things we are really emphasizing on the deposit protection side is we must pay as fast as possible, because we don't want our depositors to experience that pain of delayed service, delayed access to their funds. And so we are trying to develop and enhance our capacities to be able to take those actions. I'll take a break right now, and I allow you to just take a few minutes to think about what we've shared. Hopefully you can take some notes. If you have any questions, please write them down. We shall receive them at the end of the discussion. At this junction, I'm going to invite my colleague Angela to talk about how we are governed, our corporate governance structure, and then I'll come back and we talk about a few other things. All right, thank you for now, and I'll be speaking to you again in a few minutes.
Thank you, Alan, for laying that basis and background. Corporate governance is a very key component of what is done, and especially when it comes to the issue of deposit insurance or deposit protection. So that one has been well covered and catered for within the structures of the fund. Like Alan has mentioned, that the fund is a creature of statute or a creature or creation of the law, and based on that, it sets out the governance structure for the fund. What we note is that we have a 7-member board, and of that 7-member board, we have members from the representing the contributing institutions, which contributing institutions are the banks and microfinance deposit-taking institutions that are regulated by the Bank of Uganda. And then we also have 2 members who represent the public interest. So your interests are well covered, both by fact of the contributing institutions in which you bank your money, and also within the public interest. We also note that within the membership of the board, we do have representatives of the bank, of the governor of the Bank of Uganda. We do have representation from the Ministry of Finance, and we also, that really then covers the governance components of the board. Also, there's also a representative from the Bankers Association. So within the financial sector, I want to trust that all your interests are covered therein within the membership of the board. And the board strives to hold best practice, and all the necessary governance structures have been put in place to ensure that the fund runs adequately and the fund is in a good position to carry out its mandate. So one of such good governance practices that have been ensured followed through is to ensure that they have a board manual and governance manual that helps guide their operations and their code of conduct. Just allow me to mention that within this quarter, or within the beginning of this year, we have seen that the board has had a turnaround because they finished their first 5 years of service and they've entered into the next 5 years of service. And one thing that we need to note is that within that, the confidence that has been shown within that is that the minister reappointed the members of the board, the big bulk of the board, back into the leadership. So what I would want to say is that is a major confidence build that the minister has shown within the membership of the board. Just a second, yeah. The members of the board are flashed out there. We have at the top, most in the center, that is the chairman of the board, Mr. Patrick Kagoro. On the side, we have on what you would call the left-hand side on the left-hand side, we have which left am I talking about? Let's talk about the left-hand side here. We have the representative of the governor, Ms. Kanyemebwa, who is the bank secretary. And then we have at the top also the lady is Ms. Roy Nambogo. She's an advocate in private practice and represents the interests of the public. We have Mr. Kalema, and also we have the gentleman with arms crossed is Mr. Byaruhanga. He's a commissioner with the Ministry of Finance, and he represents the permanent secretary and secretary to the Treasury. We have Mr. Wilbrod Owo, who is the CEO of the Uganda Bankers Association, and we also have Dr. Obara, who is an experienced banker, but also brings in lots of experience in the private sector. We have talked about the management team, and that one you have seen. The CEO has ably introduced all of us, and that is the team that runs the fund, and we are all placed here together. I think we don't need any introduction, any further introduction. Talking about who runs the fund, who makes it happen, that is the team that we talk about, the team and the board. And within that team and the board, what we need to note is that the levels are laid out there. We have roughly 50 members of staff, having started from a staff of 11 who were seconded from the Bank of Uganda. We now have our own staff who are 50, about 50 in number, and that is the team that runs the fund. As you can see, I would want to say that is the winning team with whom we are growing the fund together. Yeah, we'll need to note that we have membership and coverage of the fund. Yeah, what we note, and I had mentioned it earlier, is that the membership is compulsory for all Bank of Uganda supervised deposit-taking institutions. So all those create a membership of the fund. Currently, we have 34 members. That constitutes the commercial banks, which are 26, and credit-taking institutions that are 4, and then MDIs, they are 4. We also have our deposits. We are currently insured up to a limit of 10 million shillings, and that is per depositor. So within each institution, if you have different accounts, you are insured up to 10 million shillings. And what you also need to note is that Alan mentioned that there were closures of banks in the beginning. The limit was lower then, but one of the key takes from the fund as it is now, we are deposited, the insurance limit was increased in September 2019 up to 10 million shillings from 3 million shillings. So what we'll note is the limit is 10 million as at 31st of March 2022. And what we can say with the 10 million shillings, 98% of the current accounts are fully insured. So what it means that with the 19.6 million accounts, out of the 20 accounts, we have 98% of this are fully insured with the fund. And then what we just need to note is the total value of the insured deposits constitutes like 17.8% of the total deposits in the sector. So we are looking out of 5.7 trillion out of 32 trillion. And so that deposit is actually protected by the fund. So what we can say is that we can comfortably pay off 18.4% of the total insured deposits in the sector. And so what that is we have about 1.05 trillion shillings against the 5.7 trillion. So what we say is that your deposits are actually protected. So on this note, I'll request Alan to come and take over and give you a little more insights as to why we are where we are. Thank you.
Thank you, Angela, for giving us a deep dive into the structure of DPF, how it's governed, and for all of us just to be mindful that DPF has a board, has a management team, and then has staff, and these have been shown to us. And also the other thing to note is that the insurance limit for over 20 years had remained unchanged at 3 million. And so when DPF became a separate legal entity, one of the first actions that they did was to look into that matter. Was 3 million as cover sufficient? Imagine if you had, a bank had been closed in 2015, you would be provided with 3 million shillings at the time. For some people, that is just a monthly gross salary. It may not be sufficient to really change the story in terms of your financial life. And so a lot of effort was taken and research was relied upon. And a rationale was provided why we needed to move from 3 million to 10. Of course, people might ask, why 10? Why not 15? Why not 100? One of the key things we said at the beginning is that deposit insurance is seeking to protect the most vulnerable, uninformed savers and depositors. And so we are not seeking to take away your rights or your ability to apply yourself. And so we don't seek to protect everybody. Imagine somebody having $1 billion. We cannot protect that. There will never be enough money for us to be able to have that kind of protection. But we know that there are some vulnerable people that need some protection. And we believe with 10 million, we can sufficiently cover a lot of the vulnerable people in our community. So one of the reasons that we relied upon was that we were seeking to align ourselves to where other East African countries were, the limits that other East African countries had put in place. So as an East African community country, we felt that aligning ourselves with our colleagues was ideal. At the time, our limit in dollar terms was 770 USD. That is the 3 million equivalent. $770 was the limit. But at the East African level, the limit was about 3,000. And when we did our research, we established that at $3,000 or 10 million shillings, we would get as many people as covered. There is almost, and our data today shows that over 98% of accounts are covered. So many people that were left out when the limit was 770 managed to get cover when we shifted that to $3,000, the equivalent of 10 million. The other reason was that at the beginning, when the rate was set in 1997, it was based on the Uganda shilling exchange rate of 1,000. So 1,000 at 770, you can imagine how much money was available. But over 20 years, the exchange rate has depreciated, and also the status and circumstances of the individuals had also changed. Inflation had also happened. So we felt that adjusting and bringing on board all that information was relevant. And so this is why they changed from 3 million to 10. We maintain an active stance in terms of monitoring the situation on the ground. We have an active research team that monitors the exchange rate, inflation dynamics, and the things that you spend on. And we're able to know what is happening. Are we covering adequately? In the future, should the circumstances warrant, we may come back to the minister to propose an adjustment if the circumstances are conducive for that adjustment. So it is one of the things that we now actively monitor to be able to ensure that our depositors are fairly well covered within the realm of possibilities that we can rely on. So, of course, the question then that would be coming to your mind would be, if you are covering and providing a guarantee of 10 million, where does the money come from? It is a fair question. Our major sources of income are twofold. Of course, in the beginning, we were seeded. We received seed money from donors and government to create the Deposit Protection Fund. But today, how we finance and we're able to maintain the cover that we are talking about of 10 million is there are two ways. The first one is from the law. The law permits us to charge an annual premium against all regulated banks or financial institutions regulated by the Central Bank of Uganda. And the premium they pay is at least 0.2% of the average deposit liabilities of the previous financial year. So we would look at the average deposits over the 12 months in the previous calendar year or financial year, and we will apply a 0.2% to those, and that is the amount of money that that particular financial institution should remit to the Deposit Protection Fund. So this is the primary way through which we receive and build our asset base, and it's gradual and it happens on a regular basis, so it's helping us improve the amount of funding available for cover. But we are also required, and this is by law, but also through prudency, that we should be generating and investing this money. So another way that we build our fund size is through investing. We actively invest in the local government bond market, where we strive to generate income. And of course, the question could be, why government bonds, not real estate? This money has a purpose, and the purpose is to ensure that we stand ready to give you money. If in the unlikely event your bank has a challenge, we should pay you as fast as possible. So we don't want your money stuck in a forest, stuck in real estate, stuck on the expressway investment, because that will take a long time for us to get that money back, to pay you quickly. So one of the best investments that we can make that we know can give us money in less than a day or two is through government securities. And so a lot of our investments are focused there, purposely because of the reasons why we exist, and we want to be sure that we meet those objectives and goals as much as possible. So we have had a lot of work we've done over the past 5 years, and we wanted also to share some of our achievements. One of the key things that is a hallmark of the DPF is the amendments that were done to the Financial Institutions Act. Previously, the DPF was within the central bank, and so with these amendments, it created the legal entity, a separate legal entity that is DPF. And so that is one of the key milestones. We can look at it as ground zero for DPF, because that is the day that the Deposit Protection Fund as a separate legal entity was created through these legislations. Over time, as the entity has taken shape, we've managed to recruit new staff, and the CEO shared about that. We've managed to put in place the infrastructure, the policies and processes that are allowing us now to be able to come and do public awareness. We are now looking towards automation, and one of the key goals for us is to be able to pay as fast as possible. Less than 7 days, we should be able to make a payment, because we don't want to inconvenience the depositors in the event of a crisis. So automation, we believe, would be one of the ways we'll be able to achieve that. The other way we should be able to achieve the fastest possible view is to ensure we have quality and detailed information about depositors, all depositors across the financial sector. And how we are doing that is we are establishing a system. We are calling it a single customer view system, where we shall have quality and detailed information about every depositor. With good information, quality information, we can ensure that we can pay as quickly as possible. Of course, one of the other things that we work on heavily also is awareness, and Mr. Izaga is leading us on that perspective. We are speaking to you today. We will be coming to your regions. You will see us on TV. You will see us online. We are trying to build awareness, and the more people know that we exist and that they have some cover for their deposits, we believe that will be something that will be supportive for financial sector stability and foster more confidence in the banking or financial system. So those are some of the things that we have done and we are doing. And of course, we have now officially launched as a deposit protection funds. We initially had 5 years, and last year we had a formal launch of the deposit protection fund. And so we are excited, looking forward to become a more impactful entity within the financial sector ecosystem. We've also worked with a lot of other and benchmarked from other existing deposit insurance entities in the region. We work very closely with the Kenya Deposit Insurance Corporation, the Zimbabwe Deposit Protection Corporation, the Nigeria Deposit Insurance Corporation, and BOU as well. And so we are also expanding now into Eastern Europe, North America, to work with the Federal Deposit Insurance Corporation in the United States. We are looking to work with Japan, Korea as well. And so we want to build more partnerships, because one of the key things that we are looking to do is to enhance our understanding, but also to learn best practices. And so by working with others, we're able to do that well. We are also training our staff extensively to build their capacity across different fields. And we are also very active. We recognize that we are in Uganda, and sometimes it's important for us to give back to society. And so we also have an active corporate social responsibility program where we seek to identify vulnerable areas, and we can add in our voice, but also lend our resources and time to address some societal challenges. So we have recently received an award, the FIRE Awards for financial reporting. This is a testament to the quality and professionalism that we are building within the Deposit Protection Fund. So by winning an award similar to the financial reporting awards, I think that is something that we are very proud of, especially after the first 5 years. It shows that we have the right caliber of people within our organization. And so this is something that we also want to celebrate and share with you. And we've been admitted to the Institute of Corporate Governance. So you can see that there are a lot of things that Deposit Protection Fund is doing, both in the community, both on the professional side, as well as within the larger ecosystem. And so we are becoming more and more visible, but the key thing for us is raising the awareness and visibility of some of the things that we are able to do. Responding to society and to social needs, we recently visited Maldmay, where during the COVID period, where we provided some medical equipment there, and we visited some communities in the north of the country, and we are active in supporting the Ministry of Health where we feel we are able to. And so those are some of the things that we do. So it's not just about deposit insurance. We also like to focus on people and focus on community as well. In terms of way forward, where are we going? We are focused, and I mentioned this in our strategic objective. We are about enhancing public awareness. As you recognize, we are a very young organization, about 5 years. And so it's important that people know more about how we operate, what we can do, and where our mandate stops. So we are going to be doing a lot of these engagements with you so we can walk with you in the journey of enhancing financial education about deposit insurance and the Deposit Protection Fund as an entity. The second thing that we are looking forward to do over the next few years is expanding our regulatory framework to expand the mandate of the DPF. In the beginning, I shared that we are a pay box plus. We are able to pay depositors, and we can act as a receiver or liquidator when invited, as and when invited by the Central Bank of Uganda. We are seeking to expand that mandate, possibly to become a loss minimizer, which will give us the ability to participate in resolution before the fact, to participate in resolution before a bank is really in dire straits. And so we need an expansion of the mandate to be able then to build out the capacity to support institutions in that way. So this is something that we are looking forward to work on, and we shall share as and when we have more details. Of course, as a new organization, we've been also guided by our government. They are interested in seeing us having a permanent place for our office headquarters, and so it's also something that is at the back of our minds, and we will be working together with government to see how best we can navigate and be able to have a permanent home for the Deposit Protection Fund. It will be easier for you to identify where we are, where we sit, to find us. Imagine a situation where one day we are like the Bank of Uganda. Everybody knows when you get to City Square, instead of General Post Office, now it's Bank of Uganda that is the brand in the City Square space. We hope one day we would be top of mind in terms of where we are positioned and where our offices would be, and we believe that is something that will add value to the community, but also be helpful for our stakeholders. I also mentioned that we are working to automate our systems. We believe with technology we'll be able to do two things: pay you fast and know you better. We need to collect good quality and detailed information, and then what do we do with this information? We want to be able to pay as fast as possible, and so we are working to automate our systems while building our capacity as well. Over the next coming years, we want to be able to do the things that we are talking about and to do them well. So I wanted to share a bit of the future, just to give you a snapshot of where we want to go, the things we are thinking about, and how we will be putting them together through this team. As I close, I would like for you to have some key takeaways. What are the key things that we want you to take away today? One, we want you to inform the public that they should know one thing. They should know their bank. And the acronym we want you to share with them is that they should know, each one of us should know your bank. Similar to what we say with the way the banks talk to us and say, know your customer, from where we are standing, we are saying, know your bank. That is key. It should be your individual responsibility to find out, I've put my money in this institution. Is it licensed? Is it licensed by Bank of Uganda? Does it have deposit protection? Does it? And if you hear the ads on radio, we require all those institutions to say two things: that they are licensed by Bank of Uganda, and there's a follow-up statement If you follow the radio very well, there's a follow-up statement, okay, that your deposits up to 10 million are protected by Deposit Protection Fund. We want that to be very clear. So we expect that you will take interest. If you have more than 10 million in a bank, you need to know more about that bank. You need to take time to know more about how your bank performs. Recently in April, most banks released their financial statements. We hope that you have taken time to go through. The second thing that we want you to take away from today is that each individual depositor does not pay the premium. You don't pay the premium. The premium is paid by your bank, and it's taken out, it can calculated out of, we saw the formula, which is 0.2% on the average of deposits, but this money is not withdrawn from your bank account. So that is very key for us to know and for the public to know that depositors don't pay the premium. Our view is that when we are managing financial sector stability and resolving crises, we should rely on money that has been provided by the banks themselves to sort out the crisis. We should minimize the usage of public resources and tax money. And so the whole idea about the Deposit Protection Fund is to minimize and ensure that most of the resolution mechanism for banks the money comes from banks themselves, and we minimize the usage of public resources. And so it's important that for you don't pay either through tax or directly as a debit from your account. So this is key. It's a very critical message that we want you to take away. The third point that we want you to take away is that all our contributing institutions are regulated by Bank of Uganda. All the contributing institutions are regulated by Bank of Uganda, and the deposits we protect are those that are within the regulated contributing institutions by Bank of Uganda. Okay, that is key. So the Deposit Protection Fund protects deposits that are based within contributing institutions that are regulated by Bank of Uganda. 2, the fourth thing that we want you to take away is that, and this is a message for the public, that the customers should always endeavor to check for the operating license of that financial institution they are working with. Uganda has this story, and it's very sad every time I see it. People losing money to a village establishment that has a logo bank because they did not go further to just ask, where is your license? Are you a branch of a bigger bank, or do you have your own separate license? Of course, we notice that most of our work is within Kampala. We don't have eyes and ears everywhere in the country. And so sometimes people take advantage of that, especially in the rural areas. And as part of your community, when you are in those areas where you work, please, if you identify something that doesn't make sense, an institution that may be misleading, you can let us know, or you can let the Bank of Uganda know. What we are interested in is to protect your communities, their money. We would like to see that all the institutions they are putting money in are licensed. They can be licensed by Bank of Uganda. There are other regulators. UMRA is one of them. If you identify an institution that has issues, please, you can let us know. We can notify other regulators. So it's important that this message is taken, that customers should check for operating licenses of the establishments where they are putting money. Dollar accounts or foreign currency denominated accounts are protected, but first we recognize the value in our local currency. Okay? Computation for payments are per depositor. and we try to less or to adjust for any non-performing loans. So if you are in a certain bank, Alan Bank, for example, and you have an account that has 10 million, so you qualify to be paid 10 million, but you have a non-performing loan in that same bank of 3 million, we would adjust and pay you the net, which is 7 million. So this is what that means. So when we are calculating, we're also mindful about your other obligations within that closed financial institution. So this is that's a very important message. Because a lot of people, especially in the 90s, got disappointed. When they came to collect their money, they were advised of other outstanding obligations, which conveniently they had forgotten, or because they didn't have their passbooks. Because at the time we used to use written books. People will carry everything, their debits and credits in the book. So a lot of people got disappointed because when the adjustments were made, they had less cash and more loans. And so they could not be paid back. So this is a message that is important for us to know, that when we reach that point, your loans and the performance of your loans is also important in the calculation of what will be paid back. And finally, we need to notify, and we need your help to let the public know that we do not handle complaints about banks. Yes, in our name, in our business name, we are Deposit Protection Fund, but we are not a police entity. We don't police banks. Our purpose is to ensure that we are able to pay back depositors in the unlikely event that their financial institution is in crisis or is undergoing liquidation. We are not a police entity. We don't police banks. We can receive complaints if they are related to deposit insurance and how much you are protected. We can receive those. But if a certain manager spoke to you badly in Mbale, we are not the right entity to address that question. The central bank actually has in place a whole unit responsible for helping customers address their challenges with their financial institutions. So this, for me, are some of the key takeaways that I feel would be relevant for us to discuss further, and we hope that at the end of this conversation today, these will be the key things that will be the messages that you can share with the general public. Thank you very much for listening. I hope I haven't taken too long, and I hope I haven't been, I'm not standing before you and breakfast. So thank you very much for listening. It's been a pleasure. Have a lovely morning.
The session is open for question and answer before we proceed.
Good morning, still morning. My name is Vincent Kasozi, news editor, Sanyu FM. I have two quick questions. The first one relates to the DPF's partnership with the Bank of Uganda. Because as the DPF aspires to climb up the ladder and become a loss minimizer or a risk minimizer, how does its engagement with Bank of Uganda change? Because a risk minimizer is engaged also in oversight, a loss minimizer auditors like coming up with least cost resolution strategies. Recently, when we saw Crane Bank closing, the Bank of Uganda brought in a statutory manager to oversee the management of the bank in the interim. And this is something that you do as well, as you've indicated as a, is it Cleanbox Plus? Yes. So as you climb up the ladder, does the Bank of Uganda's bank supervision role fuse with the DPF? That's something I want a bit of clarification with. How does the Bank of Uganda's bank supervisory role change as the DPF becomes, or let's say, climbs up the tier, so to speak? Then the second one is with regard to, there was a slide that Mrs. Angela had that I didn't quite understand. Well, 10 million, I understood, covers 98% of deposits. That's 10 million deposit of institutions. And then there was a slide that said that the DPF is able to pay 80.4% of total deposits, which amount to a little over 1 trillion. I need a little clarification there. 18.4% of total insured deposits that DPF is able to pay. Is this money that's readily available to pay? Because of course you don't expect all institutions to collapse at one time. I mean all at once, so maybe a little clarification there as well. Do you have money at hand to pay 80.4% of total insured deposits at any one given time? A little clarification there as well. And that's all I have to ask right now. Thank you.
My name is Edwin Mahomes. I was also attentive, but
Let's proceed with the question.
Yes, I work with Capital FM.
Okay.
And I request to know, you gave a computation about the 0.2% annual premium, the computation I understood, but what are those factors that informed the coming up with that figure of 0.2%? And then some clarity on that, how you came up with the 0.2%, the economic indicators and all those things you looked at. Number two, and then you mentioned that you have 34 financial institutions who are participating in this, and then how are they faithful, and are they contributing this as they should, or there are some defaulters in there? Because we see you give a period of not more than 21 days. Are they doing it as they should? And then lastly, on a scale of 100%, that's in regard to performance and contributions, how are these 34 doing? Is it 10% or 50% of these 34 that are contributing, or, just help me with that? Thank you so much. Oh, finally, I had forgotten this. Are there any other efforts that you are having to ensure mobile money deposits, or that's out of your reach? Mobile money deposits.
Mobile money.
Okay.
Thank you so much, Mr. Moderator, and the entire team. My name is Joseph Ekolum. I work with Vision Group as a correspondent. I'm based in Lira, Northern Uganda. One, I have two big questions. The third one will just be a comment. My question is about the determination and the level at which somebody is known to be vulnerable. Because as of what I know, there are some vulnerable members in the community there who are able to sell off their pieces of land they have, send their heads of cattle they have there, and then they bank more than even 10 million shillings. Some are able even to bank 50 million or even 80, especially during the harvest time, the harvest period. Somebody can sell his sunflower or coffee and go and bank more than that. What level of how do we determine that someone is really vulnerable for him to be compensated when his bank closes with this money? That is one. And maybe my direct question here can be, what are there plans underway to have this limit increased within the shortest period of time? That is one. Secondly, my comment about the upcoming tour, the upcoming tour that the previous presenter just mentioned. It is just a word of encouragement from me that I think our people need more need the faster plan than we can be planning, than we can be doing now. Because if me, who has over 3,000 or 5,000 or 10,000 followers, I came here empty-minded, I couldn't even really interpret what deposit fund is all about. That's how about my followers down there in the village. And also, I would request that much as you have now trained us, you also empower us. Empowering us means giving us some of those handouts, whereby for those who work on the televisions and the radio stations, they can be educating our people. Like that. Not only paying for a radio advert or a radio talk show, and then you go there, you spend only 30 minutes, then only 5 or 3 callers are allowed to call and give the feedback about what the presenters have presented to them. Maybe we go a little further by empowering, first of all, you have trained, and then the rest of the community should be reached as well, directly by the team. And then, thirdly, this is also as a comment, it's a question and a comment at the same time. As part of your direct engagement with depositors, we would also take into consideration encouragement. You should always encourage these banking institutions to continuously preach this gospel of financial insurance, financial depositors insurance. Because most of our people there don't know about some of these things. And when they go to the bank and they see a flyer like this with the DPF, they think maybe the DPF is a new loan that has been introduced. So they should be educated, these bank tellers, these bank managers, and if there is any possibility, someone will be put there, a focal point person from DPF at those banking institutions to educate the rural community who come to get services at the banks. This will enhance the capacity and then get out into the massive know of what the DPF is doing. Thank you so much. When the time comes, I will come.
Thank you. Thank you, Joseph.
Thank you very much for the questions that have come through. Indeed, they are very intelligent questions. I would like my team to take some of these questions because I know where their strengths are. So I would like Doctor to take the question on whether CIs comply, take the question on mobile money deposits, about that insurance there, and whether we have any plans to increase the deposit insurance limits. Then I would like Alan to give us the answer on whether the money is readily available, to pay the 18.4. Doctor will also take the point on how we shall be coordinating with the Bank of Uganda, because it's our head of operations. And I think I will take the other questions. So, Doctor, over to you.
Thank you, CEO. Good morning, media group. You're welcome to this workshop engagement. I will try to answer the questions, and the colleagues can supplement. I will start with the one of 0.2%, the annual premium. The annual premium, the 0.2% was arrived at by, first of all, considering the hierarchy principles, the international practices, but also we benchmarked from the East African, the countries within the East African community and other countries within Africa. So it is not an arbitrary figure. It is not just based on the economic situation of Uganda. The figure was arrived at after a proper study, considering international practices, the hierarchy principles or the international standards, and benchmarking from countries within the East African community and other countries within Africa. And the figure is clearly stated in the Financial Institutions Act. So it's not like we keep revising it. Until when they amend the Act maybe, and we feel we need to revise the figure, that's when it might change. We have 34 contributing institutions. They're supposed to pay us annual premiums and risk-adjusted premiums. They are required to pay this by law. So none of them ideally is defaulting. If you don't pay, we give you a penalty. They actually require, if we invoice you or if we send a notice, you're supposed, at that institution, you're supposed to pay within 21 days. After 21 days, we charge a penalty of 0.5 of the amount outstanding times the number of days it's outstanding. So it keeps on accruing. So definitely with that computation, no institution will want to default. So we don't have default as idea. Review of the limit. The current limit is 10 million. It was previously 3 million. It was last revised in 2019. Yeah, it was last revised in 2019. And we might review it every 5 years as the situation indicates. So it was 3 million. It was revised in 2019. And it can be reviewed after 5 years, so it can change. Yeah. Coordinating with Bank of Uganda. We feel as DPF, or when you're insuring somebody, the risk is on you. So our interest as an insurer, it's really very, very high because we don't want, it's like when you insure your car, the insurance company really does not want to pay. It makes sure that you have to prove, it will monitor, put conditions and ensure that it can, ideally yes, it is insuring, but it doesn't want to pay because it has a lot of interest in it. So similarly as DPF, our interest, we don't want to pay. We really want to ensure that we understand the institutions we are insuring. We closely monitor them. We closely supervise them, and in case of any problem, we are able to manage as an insurer. The interest might be different from Bank of Uganda, and that's why we want to increase our mandate. Be able to understand what we are insuring better, rather than just relying on what BOU is giving us. Because the risk is very high on us, especially given that we have to pay in case the bank has failed. So we need to really understand what we are insuring properly and be able to monitor it and be able, in case it is the last result we have to pay, we are convinced that we really have to pay. So that's why we are trying to increase our mandate, but we are also hoping that BOE is our partner, and as we review, as we amend the Financial Institutions Act, we definitely have to take into consideration the mandate of BOU and also align our mandates so that we are not into a conflict. Yeah. Mobile money deposits are not within the mandate of DPF. I think it's Bank of Uganda that handles that. Yeah. Then there was the one of 18.4. There was a confusion on that. As a fund, we have what we call a fund size, and our fund size keeps on growing. So as we keep getting annual premiums, as we keep investing the money, the fund size keeps on growing. So, and then even the deposits keep on changing. So we are what we call total protected deposits. Total protected deposits are balances or accounts that they are basically deposit balances below 10 million. So they're the total protected deposits. So some of the accounts are fully protected, meaning that these accounts have balances 10 million and below. And then we also have accounts that are partially protected, meaning that the balance on your account is maybe 15 million up to 10 million. So such an account is partially protected. So when you talk of total protected deposits, we look at fully protected accounts. It means that those ones have balances below 10 million, and partially protected accounts that we shall protect, or the account will protect up to 10 million. So when you talk of what we can pay, given our fund size of the total protected accounts, what can we pay? So because we have a fund size, so we can only pay 18.4% of the total protected deposits. And if we compare with the East African benchmark, they recommend that we should be at 20%. So we are still slightly below the recommended East African benchmark. And that's why as a fund, we are working to ensure that we prudently invest to grow the fund size so that we are able to at least comply with the East African benchmark of 20%. Thank you.
The question about whether the 18%, the fund that we invest in, whether it's readily available. And yes, it is readily available because the way we invest is that we focus investing in short-dated instruments like treasury bills and bonds. And the way we organize them is that they should be maturing almost every month. We have money maturing every month. So in such a way that we have sight, we know, we receive information from Bank of Uganda giving us an idea what might happen in the next 3 months, which institutions are they following. And so what we try to do then is to have enough money just in case there is a call of action. So we organize our treasury bills and bonds such that every month there is a very big amount of money that is maturing. So then we are able to reassess at the end of that month whether we need to reinvest that money further or manage it and break it down into smaller portions that are targeted to mature within the next cycle, which is usually 3 months. So this is how we manage and ensure that money is balancing two things. The money is readily available, but it's also invested at the same time. So you don't want money sitting on cash, because as we know, cash is affected by inflation. So by doing nothing to your money, leaving it on the bank account, it loses its ability to make payments. So how do we address that question? Is we invest it in treasury bills and bonds, because the way they are designed to pay us, they factor in inflation in the price or in the interest rates that the treasury bills pay. So this is how we make sure that the purchasing power of the money we shall give you is maintained. That's how we balance those two questions of liquidity using investments as an avenue. I hope that is useful.
Thank you. I'll take the question on how do you determine someone is vulnerable. Now, when deposit insurance is looking out for the vulnerable, it's the vulnerable and small. There's and. So if you're vulnerable and you're a big depositor, then you should be able to use some of that 80 million that you have. Give it to someone who can analyze for you the statements, and then you're able to make a wise decision. So it's vulnerable and small. So we think that small is 10 million and below because that is what we can also afford to cover. And once you're above that, you have to find another way of becoming less vulnerable, if you're vulnerable. Yeah, financial education, literacy, and so on. You take it upon yourself because you have more to lose compared to the other with a small deposit. I just want to add on to what my colleagues have submitted, the relationship that we shall have between DPF and the Bank of Uganda, especially as our mandate grows. The relationship will just keep growing, but it shall be enshrined in the law so that there is no confusion about where do we stop and where do they start. So for example, I can say it will still be the Bank of Uganda that will determine that the bank has to be closed. And probably they now tell us that this bank has to be closed, look at the best resolution option. We shall analyze and come back to them and get their buy-in. We'll have to work very closely. Their buy-in that for this one, we have identified an acquirer, we can actually sell it. And they say, go ahead, proceed with the sale. We shall continue being joined. The same way we're joined with the media, the same way we're joined with the Bank of Uganda, but the law will be very clear on what our responsibilities are in order to avoid any conflicts and to keep the financial sector safe and sound. And there's a question also on how did we determine the 0.2? Deposit insurers, when coming up with that amount, have to look at their target fund size. The target fund size is how much money do you think you will need to have in order to pay the depositors that we're talking about. As we've indicated to you, right now we have around 5 trillion protected, but we only have a fund size of 1 trillion. So that is inbuilt into the computation when you're coming up with the 0.2. And so we think with the 0.2 after a certain period of time, and usually it's 10 years that you're looking at, we should have been able to cover more of that protected deposit. And good enough, it's also within what the region charges. Yes, there were comments, these were comments about how we can improve on our public awareness. I think Patrick and the team have really taken them up about how we can coordinate with the CIs and so on. I believe that we have answered all the questions that have been submitted to us so far. Moderator, I submit.
Just to, maybe for the benefit of Joseph and the rest on the awareness side of things, this engagement is, call it setting the ball rolling. But as we go into the new financial year, we realize that we have to be more on the ground. And we don't go on the ground with the kind of Zungu I'm speaking here. We have to package ourselves appropriately. So soon you're going to see sufficient information translated to the major local languages and so on and so forth, so that we start speaking directly to the beneficiaries, the depositors themselves. Yes, we understand that, that they are still in that gap, because I will shock you, for instance, with due respect, that there are people who are in the banks and they are not very different from what you guys were 2 hours ago. They see DPF, it is actually stuck on the glass right in front of them. And beyond breaking down the DPF into Deposit Protection Fund, there's almost nothing they can say. Not of their making, but in life sometimes, you know, it's about your own initiative and desire to learn, which is what we'll discuss towards the end. So yes, we have plans as a Special Communications Department, as part of our awareness drive. We're going to be in touch with you. We have now collected your information. All these presentations we have shared, for instance, are already on their way to your emails. These will become your blueprints. So we expect that when you go back to your areas of jurisdiction, you're going to become professionals on deposit insurance. You can gather an assembly of 4 or 5 guys and talk to them with confidence. And you can be sure that you will at least be the better informed in that group. So you remember what I said earlier, you are going to be part of our change agents, and for us, we are creating a partnership that should enable us to reach all the way down. So yes, there are plans. Thank you very much. All right, let's take the next 3.
Under what circumstances the DPF be called upon to pay the insured deposit? Because someone may ask, such question normally in people who are in village areas, and we need to understand under what those circumstances will DPF come on board to pay the insured deposit. Thank you so much.
My name is Edward Kaima. I write for New Vision. While listening to both Alan and Angela, I read something. Alan said that your desired position is to be a loss minimizer. But then he also went ahead and said the law currently is an inhibiting factor for you to operate as a loss minimizer. And this was actually also reiterated by Angela in her submission. So then I asked the question, where are you so far on the process of having the law adjusted to allow you to become a loss minimizer? Secondly, it was not so clear exactly what is pushing you, because after 5 years as a Pro Box Plus operator, you are seeking to become a loss minimizer, probably to play into a larger space in that industry. But then the question is, according to Bank of Uganda, the banking sector seems to be so stable. There is no issue at all. But what do you see? Is this move inspired by fear of what you currently see? Thank you.
This question I get sharper and sharper. Thank you very much, but we'll have a response. I'm very sure about that. Next.
Thank you very much, colleagues. My name is Billy Oto. I work with Radio Unity in Lira as the news editor. I was moved when the executive director was talking about the need for the media to dispense accurate information and her commitment to providing the media with such information that is accurate and timely. I want to ask whether the DPF has an information desk that can respond timely to questions that the media can ask so that we dispense accurate information. Secondly, I wanted to ask whether DPF has a bank that keeps the money or the deposits that deposit-taking institutions give, that's 0.2%, but I'm told now that it's kept through treasury bills and bonds. And then, very finally, how fast does Deposit Protection Fund respond in compensating depositors just in case a bank chooses operations? Is it in terms of a quarter? Is it in terms of a year? Do they respond on prompt, maybe when there's a court action that has been commenced? How do they do that? Thank you.
Thank you, Billy. Okay, this is Jonathan.
Yeah, thank you very much. My name is Jonathan Driviga, news editor at Arua 1 in Westland. The first question relates to your plan to popularize your intervention as DPF across the country. Now, the question is, yes, you're giving us an opportunity to be your ambassadors across the region, but do you have any plans to strengthen your footprint by establishing, for example, regional or district offices, so that probably somebody can walk into your office and raise a matter of concern? That's number one. Number two is, you've empowered us today to tell Ugandans that yes, you should be able to save money to what you call favorable 10 million shillings, and then you can be compensated in an event that a bank closes. And yes, people are going to take up this message clearly, but Ugandans are clever. Somebody is going to open multiple accounts. So will that make economic sense if I'm going to have 3 accounts with 10 million shillings as DPF? What are you thinking about that? And lastly, in a situation of war, for example, I know you invest, you find different ways of investing so that you're able to build your capacity to compensate. Now, in an event that, for example, the economy collapses, what alternatives do you have as DPF? What is your relationship with international banks, institutions? Do you have that as a backup plan? Thank you very much.
Where do we keep DPF money? This one I just want to answer that yes, the treasury bills, but our bank account is in Bank of Uganda. So we have a bank account, but in Bank of Uganda. All DPFs have their accounts in their central banks. It's the safest place, because if you put in a commercial bank that has to close, what will we tell Uganda? In the case of war, I'll let Alan take a shot at that. And then I am going to talk about why we have decided to go to the loss minimizer and the strategy on branches. Thank you.
When does the DPF can pay depositors? Now, as a fund, we have set up an IT payout system that we want to use in the event that we get into a crisis or an institution is closed. So we shall be using the IT payout system to pay depositors of a failed institution. Now, the IT payout system has been implemented in such a way that it interfaces with the telecom companies. Some telecom companies, the big ones, whom believe that most of the depositors actually have their mobile money accounts there. So we believe that in a situation where a contributing institution is closed, we will have the records of all the depositors already on our payout system. Actually, we have made it clear that we should have records of those contributing institutions for the depositors, and then we will use that record and submit, do the computation of the deposits that we should be paying the depositors, and then we send the request to the telecom companies, the mobile service providers, to pay. Now that's one leg of the payment. However, there could be those who may wish to transfer the money to another bank. They have other accounts in some other banks. So we will also, through the system, the IT payout system, we should be able to transfer your money. If you are advised to do so, we would transfer the money to another account of your preference in a certain bank. Now, there is also another option where you want to walk into the agent bank to pick your money cash. We can also, the IT payout system will be able to do that as well. So, in brief, that's how we plan to pay our depositors using an automated payout system. We believe it's going to be very efficient and going to be, we should be able to pay within the shortest time possible, according to our yearly principles that we are actually required to pay within 7 days.
We pay per customer per bank. So if you are in bank X and you have 3 accounts, you are one person because you are identified by one name. So you have one name or national ID number. So irrespective of having different bank accounts within the same bank, we shall consider you as one person. So if one of your accounts in bank X has 10 million, another has 20 million, and another maybe 5. So when you add 10 plus 20 plus 5, we have 35. So you are one individual in that bank that has been closed. So therefore shall pay you up to 10 million.
Set of war, how economic systems are restarted, the donor community usually comes in. and we've seen this very highly for Ukraine. A lot of money is being provided by the World Bank, by the European Investment Bank, by the European Development and Reconstruction Bank. So even for us, if we reach that stage, what is most likely to happen is that the donors may have to step in to help us meet some of our obligations. And so from the DPF side, one of the things we do a lot is be very friendly and keep the donors very close. So we engage with them, we speak to them, so we have good relations, just in case we need to have certain conversations. So that will be another way that we'll be able to pay, even if we are extremely distressed. And of course the final one, this is just something we are trying to explore. How do we use risk products, insurance, regional and continental insurance products? Can we insure the system with somebody who is of a much bigger size? What if we got the Africa Trade Insurance or other such big organizations where we also pay small premium and then we get some cover of some of these events? So usually in normal insurance, when you insure your car, the person who was insured, you also get insurance. Okay, so it's taken up. So because the person knows your car may get spoiled and I have to buy it, but I may not have the money immediately. So they also reinsure that I've insured somebody. It's called reinsurance. So we are trying to borrow from that concept of reinsurance and are trying to apply it in deposit protection. It's still very early because it's a very strange concept for deposit protection, but we are trying to see and speaking to EAD and the World Bank to give us guidance on how to think about these questions. So for me, top 4, those will be the key ways that we'll go about in handling a very, very extreme distress on the economy, where we feel that even the money that we have is now at risk of not being sufficient to meet its purpose. Those will be the top 4 ways we would likely go about it. I hope that has been useful to you all.
Thank you very much for the question regarding where we are at on the law. Indeed, the fund realizes and has been proactive not to wait to be caught up in a scenario. So we've started the process of amendment of the law. One thing we need to realize is that law is a dynamic. It's dynamic, and you have to have a robust legal framework. So you should have a framework that looks both forwards and backwards, and you don't wait for it to get obsolete that you start running forward with it. So the fund in that line has taken on the role or in the mantle of running forward and looking at what all possibilities are in relation to what the needs in the country would be relating to deposit protection. So where are we currently? It is a requirement now of government that any person who wants to have any policy change, and if the policy change touches upon something that relates to the nation and for public institutions, it has to go through cabinet. It has to be cleared through cabinet. And how is that policy change done? You have to go through what is called now a regulatory impact assessment, where, because it was realized that many times people coming out, they give examples that people come in to say, we have a big problem, we need to amend the law. But it may not necessarily need to amend the law, it may need just a policy change or a behavioral change. But people are running to change the law for each and everything. So now, you go through a proactive process of assessing what you actually need. And use various options of assessment, 6 of them, that by the end of it, you'll find that they all speak into each other and without avoidance of doubt, state that you need a new law. It is a scientific tool, so you cannot guess, you cannot cheat around it. And we are glad to report that we are at the tail end of it, and it resonates with the needs of the fund, and as we had projected, that there is need to have a new law. So what is going to happen is we are almost done with the regulatory impact assessment. We have gone through stakeholder consultations. The document is then owned by the Ministry of Finance, the minister. We fall under the Ministry of Finance, so we do not walk into cabinet. It is our minister who represents us. So the minister will take it to cabinet. Cabinet assesses it and will give instructions for drafting of a law relating to deposit protection in Uganda.
I just wanted to make an additional comment on the question, how long will we take to pay? The length of time we shall take depends on the cooperation we receive from the depositors. And that is why we had a campaign of updating depositor records, especially with your need and alternative mode of payment. So when it comes, when a bank is closed, we shall pay those who have updated their records automatically. We want you to get your money on your mobile phone, don't walk anywhere. But what happens if you haven't updated? That we shall look at later and go through other processes of verification to ask you to come and give us that information. So the speed, we need to cooperate together, and that's very important information for the press to share with the public. When do we plan to go regional? We've just started. We're first building our base here at the center, at the head office. Most definitely with time, we're going to spread out to the regions. But in the meantime, we have the Bank of Uganda offices where a lot of information can be obtained about the DPF. But that definitely is a strategy going forward. Loss minimizer, what does the DPF see that maybe other people don't see? The DPF doesn't see anything special. It's just that even within a sector which is strong, you might always have one or two institutions that are a little bit weak. You can't rule that out. That is just part of nature. And so when they have to be resolved, meaning they have to be assisted to get out of the market in an orderly manner, sometimes some of them are not so badly off that you just need to close the doors and pay through DPF. Some of them still have value. But in order to make it attractive to an investor, they might need some little money so that their balance sheet is cleaned and looks more attractive. And that is where the fund will use some of its money to assist in that, we can say, making the balance sheet more attractive and lucrative to the potential investor. And so this is just a normal part of resolution. It is also part of the key attributes of effective resolution. Now, because the DPF doesn't have that mandate, it means that taxpayers' money is being used for that. When the Bank of Uganda resolves through those purchases and assumptions, through acquisitions, if they need to make the balance sheet attractive to the investor, they will have to use public funds, and that is what the international principles are saying. Don't use public funds. Why don't you use this private sourced money which is sitting in DPF to help with that process of balancing the balance sheet and making it attractive to the other bank or the other investor who's interested. Thank you for reading.
Thank you, CEO.
In the bank, please ask your relationship manager, or if you walk into the bank, just ask to update your particulars, because in the unlikely event that the bank will come down or be closed, it will be closed, then you'll have a problem being paid. That is why they ask for that information. Now, if you happen to die in this process, one, you have got, let me move away from sticking within that the next day you die. But we have areas that are very clear and documented legally. One, you need to have your next of kin and everything straightened out. No one just walks in to get paid someone's money. You have to clear under the succession law. Either you have someone who has letters of administration or someone who has got probate, where you have advised what should happen to your bank monies in the event that you die?
So I'd like to answer the question of for how long will you keep the money? Now, that's a very important question and we're always asked. For how long will you keep the money? The last time the bank was closed was 20 years ago. And that has informed also the decision for us to become a loss minimizer so that we can start using some of that money to help make balance sheets attractive for an investor to buy. Because that has continued. We've had a lot of banks that have been resolved by central bank. So that is not something 20 years ago where we're looking at the Crane Bank situation, which has been quite recent. The other thing is you always have to have this money on standby because the banking sector is like life. You don't know what will happen and a bank closes, or you don't know what can happen in an economy and it gets strained and you enter the dip, banks start closing. So you always have to have your money on standby so that when that happens, we don't start saying, now we give out the money back to the banks, give back the money. That is going to take time for you to get. One, the banks will not have the money because they've used it, given out loans and so on. And then two, the time that they will give you that money, even if they have, you have delayed to pay depositors. And the worst thing for deposit insurer is to delay to pay depositors. Why? Because you're going to affect their confidence in the financial system. And indeed, many research studies show that there are a lot of people who have opted not to put their money in a bank because their father suffered in Greenland Bank or their mother suffered in Cooperative Bank. And so that is why the world over deposit protection funds are being created and coming out of their central banks to ensure that they have effective systems to be able to pay so that confidence in the financial system is maintained. I want to emphasize something about rumors. I know it's a general concept that we should not listen to rumors, but when it comes to the financial sector, rumors are bad because they can bring down banks. And how does that happen? It stems from the way a bank operates. When I put my money into a bank, that is the same money that the bank lends out to other customers. So while maybe I have 10 million, that 10 million is not sitting there waiting for me. Half of it maybe has been lent out. And so when we have rumors circulating on social media, in mainstream media, that a particular bank is going to close, all the customers are going to want the 10 million. So if, for example, we have 10 of us all having 10 million, we'll all want that money. But remember, the bank has given out that money in loans, and so the bank is going to be strained. It will not have money, and the bank will have to close if it is not assisted by probably central bank or any other financial. So that is the reason why, for us, the media, we should not be party to rumors. Most times, in the life that I've led, most times rumors are orchestrated by someone who wants a bank to go down because they know that it can bring the bank down. So let's not support that. Let's ignore that and trash it. When a bank is to be closed, hardly anyone knows. I don't know if any one of you knew when Greenland Bank was closed, going to be closed. That is a top secret. No one will know. And the reason no one will know is that if anyone gets to know, the bank will close, plus other banks will also start closing. So please, those rumors are orchestrated by people who have a hidden motive and they want to destroy a bank. And not only a bank, they can destroy a whole financial sector. So please, rumors, avoid, counteract rumors if you ever even come across such. Moderator. I think it's only befitting that I started off the program standing here, and I should also close the program standing here. So, ladies and gentlemen, it has been a pleasure interacting with you. At the DPF, we thank you so much for taking the time to be with us. We thank you for the feedback that you have given us. We are also grateful that the information that we have shared seems to have sunk in well from the questions that you have presented to us. We thank you, and we would like to encourage you to continue with a good spirit. Whenever we have such functions, please turn out in good numbers and keep time as you have shown. Us as the DPF, we're going to do everything possible to improve on supporting you in disseminating information to the public. I'd like to thank the hotel that has provided us with various facilities here at the Africana Hotel. I'd also like to thank my team headed by Patrick Izaga, and I would like the team to please come in front so that the members can see the people who have worked hard to ensure that this event is successful. Mariam, Juliet, Josephine, Betty, Fortunate, please come. Godwin, please come. This is part of of us being known by the public. While it's good for the public to know the senior management team, we are also in an era where we have to do succession planning, and you are the ones who are going to take charge of the fund sooner or later. So we have Fortunate here, we have Betty, we have Andrew, we have Godwin, we have the elegant Juliet joining us. Actually, DPF has a lot of elegant staff, and there's another group that's coming. We have Josephine, we have Prosi, and we have Mariam. Team, thank you so much for the work that you have done. Keep in touch with the media, because you don't know when they will need us or when we shall need to give them information. Thank you very much. Yeah. Please clap for the team. So, ladies and gentlemen, with those few remarks, I would like to declare that this event is closed, and I look forward to further engagements with you, the media. Let's continue partnering together so as to build and to contribute to a stronger financial system for God and our country. Thank you.